Shanjan Venkatraman. He's the Director and CEO of V-Guard. Hi, good morning and welcome to the show. Q1 revenue growth of almost 24% year-on-year. All business segments have also delivered double-digit revenue growth. Just want to know what has aided this kind of a growth and what is the top-line outlook for FY27?
No, I think as far as the current financial year is concerned, I think we had a strong summer as far as South is concerned. So the southern region has done well, and which has actually driven the overall growth. Also, in this quarter, there has been significant pricing inflation in commodities, right? Significant part of which has been transmitted through the quarter, right? The combination of these two have driven our growth, although our underlying volume growth still remains in double digit, powered by a strong summer in South. We expect to do well this year, considering that last year has been challenging, and we've had a reasonably decent start as far as summer is concerned in South. Yeah.
Right, so you have given a guidance for around 15% growth. Now, given the stronger than expected start to FY27, do you see any upside to this guidance, or would you prefer to remain conservative given the macro uncertainties that we are seeing?
I think the macro uncertainties remain for now. That being said, I think we do expect to have better growth than that, in the near term. Although I think we will have to wait to see, the impact of pricing transmission towards the later half of the year.
All right, if we just focus on the demand, that remains strong across all segments this quarter, but how do you see consumer demand evolving over the next few quarters, particularly after the strong summer season?
I think demand in general has been good, particularly in categories which are driven by summer in South. Although non-South, I think summer categories have underperformed, particularly Northern India has been flat for us. As far as kitchen categories are, we are seeing good traction. We are also seeing good traction in some of the emerging categories like renewables, and all of these factors are helping us. We expect demand in the near term to hold, although I think the commodity increase has been pretty significant and is expected to be high teens as far as the pricing transmission impact is concerned as we what I would say travel through the year. This impact will have to be seen. I think right now demand is holding firm, rather except for categories in certain geographies where season has been a challenge. Particularly the onset of summer has been interrupted with frequent showers, and this has resulted in tepid demand in certain geographies in the country.
Right, so commodity inflation, particularly in copper and polymers, remains elevated. Now, how do you expect your raw material basket to evolve over the next 2 to 3 quarters, and what is your inflation outlook?
I think inflation should ease, I think, once the uncertainty moves away. A lot of, the current pricing inflation is also connected with the current uncertain environment prevailing on account of the Middle East and the other geopolitical issues. In the near term, the prices remain elevated, although there is some moderation in petroleum derivatives. But overall, prices remain elevated, and even commodities like copper and aluminum are staying significantly higher. I think the resolution of the current conflict in the Middle East will be key and critical to easing of commodity prices.
So talking of commodity prices, now if commodity prices remain elevated over or increase further, would you prioritize protecting margins through pricing, or would you absorb part of the inflation to safeguard demand?
No, I think it's critical to protect our gross margins as it's an implicit and critical element in our overall operating model, and so protecting gross margin is going to be essential to funding our growth. And is also going to be essential to making investments for the future. So I think, as far as we are concerned, we will, try to protect our gross margins. And as you have seen, we have done so in Q1, and to some degree, we have been impacted in some geographies, because of faster pricing transmission compared to competition. But I think it's critical because I think in the midterm things all settle down. But in the short term, if we don't protect our gross margin, it's going to be difficult to protect our operating model.
Right. So, Mr. Venkatraman, last quarter you indicated that 70 to 75% of the required price hikes had been implemented. So, tell us, what is the current status of pricing actions, and do you expect further price hikes if commodity costs do remain elevated?
I think we have been, progressively taking price increases. I think a significant chunk of the increase was taken in the month of March. We had subsequent increases in May and June, which are also keeping in mind competitive actions. Even in the current quarter, we do expect to transmit pricing in some of the categories where pricing transmission has been delayed. The pricing transmission will continue till this commodity impact is fully transmitted to the market. As we speak, 90-95% of the pricing transmission has already been undertaken, and there is about 5 to 10% of pricing impact which we expect to transmit in the current quarter.
Let's talk about consumer durables. Consumer durables returned to profitability this quarter. But what operational or strategic changes drove this turnaround? And what is the medium-term margin aspiration for this segment?
I think in the midterm, consumer durables as a category, will recover profitability, on the back of, product refresh. The product refresh actions, have been rolled out over the last 10 to 12 months, and which has also enabled the improvement in profitability in this category. That being said, even as we speak, the transmission has been a bit slower in these categories compared to other categories. So we do hope to further recover margins in this category as we go forward.
Right, so let's turn our focus now to working capital efficiency. Now, it's improved significantly this quarter. What operational measures do you think have actually led to this improvement, and how much further optimization will be possible?
I think, on the back of, good demand starting last quarter, which is, the Q4 of last financial year, we have been, witnessing better traction compared to our forecast. And this has resulted in our overall inventory coming down. Also, as, in large parts of the country, particularly South, which is where we get, 50% of our business, the weather has been positive. So collections have also been good. And the combined action of better collections and the faster velocity of movement of finished goods off the shelves has resulted in a more efficient working capital. So I think this will be sustained through remaining part of the year, is what we expect, as we expect the demand to hold up through the remaining part of the year.
All right, Mr. Venkatraman, that's all the time we have. But thank you so much for participating and answering all the questions today for us. Thanks. But let's take a